After scaling new peaks yesterday, the markets consolidate. The mid and the small cap indices see a sharp fall with 90% of the stocks closing lower. Both these indices recorded their biggest single-day fall of 2023. Meanwhile, the Sensex and the Nifty closed flat as large-cap IT and banks lent some support. Hello and welcome to another special edition of Editors Roundtable. Today we take a look at how valuations are, especially when it comes to the mid and the small caps. We put the spotlight on government-owned companies and the returns since their IPOs. That's not all. We'll also bring you big market voices. I'm Reema Tendulkar. With me, we've got Anuj, Prashant, Nimesh and Nigel. Hi guys, feels like, the hangover.
It's a Friday? Okay. It's already Friday. I just hope this, we don't have these kind of days too often. Because otherwise it will become a bit tough, right?
This is what happens when you party on a Monday, right? On Tuesday you get that hangover.
I think that's what happened to the markets as well, right? The mid-cap and the small-cap indices, they were partying so hard that maybe today, in fact, they had to pause.
It was like for too long, right?
Yeah,
I think too obvious, too long.
No hangover, nothing, just going on partying, going
so
full throttle.
This had to come. Like, one of the days it had to come. Yeah. It's come today. There were some reasons as well. But anyway.
It's almost like, you're riding a two-wheeler without wearing a helmet and, going at 110 kilometers.
And you forget that there is a brake.
Yes, but maybe because, on Noida Expressway, but even there, sometimes, you can get a speed breaker or something and that's what happened.
But is this a pothole? Or is this something, are we going to jump off a cliff? How would you rate this, bump that we've seen today?
Yeah, it's very interesting. Actually, this morning I had done some number crunching in terms of how the valuations are looking for large caps versus mid caps. So let me just go over to the wall and put some numbers in context because, what we're looking at right now is the large cap versus small cap or mid cap. Where is the comfort right now? And obviously the comfort is with the large caps. Not really with the mid-caps. Look, the Nifty is expensive, but not in bubble zone by any stretch of imagination. Nifty is 20.3 times one-year forward earnings, and 10-year average has been about 18 times. It's the mid-cap which is the problem. 25.2 times. By the way, that also is not bubble territory, which Prashant has been highlighting, and I'll go to him as well. The 10-year average is 20.1 times. Small cap at 20 times versus 16.6 times, which is the 10-year average. And the Nifty Bank is actually undervalued right now, 14.2 times versus 16 times. Talking about the Nifty, where have the recent peaks been? And I'm talking about just the recent peaks, the last 8 or 10 years. In 2015, it was 23 times. In 2019, it was 24.5 times. And in 2021, it is 23 times. Considering we're at 20 times right now, another 3 notches could mean another 1,500 to 2,000 points from the Nifty minimum. I'm not saying we go there, but not quite there in terms of bubble territory. Now, there's some interesting things that I'm looking at. Some sectors which are trading at a premium valuation. And no surprise for guessing, a lot of them are mid-cap names, infrastructure, chemicals, real estate, and PSU banks. They're all trading at a premium compared to their own valuations. And sectors trading at discount, there's telecom, there's media, there's private banks, which is interesting, and there's metals. But you know what? There's one more metric which I look at, the number of stocks hitting new highs and new lows. That number has still not reached alarming proportion, 244 new highs and 15 new lows. And finally, some stocks where there's valuation comfort versus some stocks where there's discomfort. First to the stocks where there's some comfort, and you'll see a lot of pharma names there, Apollo Hospitals, Dr. Reddy's, and some PSU names despite the rally, BPCL, ONGC, and some commodity names like Coal India and UPL, and stocks which are now trading above their median valuations or recent average multiples. A lot of IT names after the recent rally, HCL Tech in particular, Infosys, Titan, which is trading at 20% premium, and Reliance, largely because, earlier Reliance was pure oil and gas play. Now it's a lot of new age play, that's why as well. But you know what, as I said, a lot of this is about the mid-cap and small-cap valuation comfort. And I want to toss it to Prashant because he has also been doing some work on where actually the peaks normally come for the mid-caps and small-caps.
Anuj, you looked at valuations and price to earnings multiples. So I decided to look at it another way, which is ratios, right? I think Atul Suri in the morning was talking to us about that. And the idea behind using ratios is that the Nifty is the benchmark, is a large index. Mid-caps and small-caps are, if the Nifty is the head, mid-caps and small-caps are the tail. So you take a simple ratio, which is Nifty divided by wherever the mid-cap index is, Nifty divided by wherever the small-cap index is. And I looked at data all the way from year 2000. And there are about 6 tops and highs and troughs And it kind of gives you a nice indication. The graph will come up on your screen, and as they say, a picture is worth 1,000 words. My words will accompany the graph on your screen. The first is the mid-cap ratio, right? Nifty divided by the mid-cap index. It's pretty clear. I mean, I think one doesn't need very much by way of explanation. Right now, that ratio is 0.48. Look at the previous significant top. That was in January of 2018. That was a mad rally, right? I mean, Sanjeev Prasad called it a mad cap rally this time. I think that was even bigger. We got to 0.49. The low was made in March of 2020, and back then the gap had increased to 0.73. So when the gap reduces, you basically, in the case of the mid-cap index, you say that you're getting to very, very high levels, which is the case right now. At the lows, the gap actually will be larger. You can look at the previous instances as well, but you basically get a sense about what has been happening here. Now look at the small cap index as well, which is the same index, and here also the graph will tell you the story. The difference between mid-cap and small cap indices, mid-cap index, I mean, if you take a range, it's an upward sloping sort of chart. In the case of the Nifty divided by the small cap index, it's a slightly downward sloping chart. We've got data since 2006. And this is more interesting, and this I think was open to debate as well. The previous peak, right? The low was of course made in March of 2020. The ratio back then was 0.41. We have now moved up to 0.64 as of today. The high, the top of 2018 was January of 2018. We went as high as 0.9, and this is the ratio which I think Atul Suri in the morning was saying that we're in a way, I mean, if you go by this, you're basically only halfway done. Yeah. And I like the fact that, these trend lines also sort of join nicely. They join all the highs, they join all the lows, and give you a nice sense of, where the tops usually come in. Before 2018, the earlier top came in January of 2008, right before the Reliance Power IPO. At that point, that ratio had gone up to 0.9 times, 0.97. So the tops are 0.97, 0.9. Right now, we're only at 0.64. So, it gives you some sense. I mean, you tie this in with other indicators, etc. And I would say you get a sense that, you've done a fair bit, but to say that, well, this is it, and, the market is, even the mid and small cap indices are going to completely top out, etc. I mean, I would be, if you were to do a straw poll right now, I would say I'm not in that camp, that, this is it, the story is done, and the market is toast. Actually, I would lean on that side.
Yes, in fact, let's now try to get some sense from what Nimesh is hearing as well, because Nimesh, there was some buzz about what led to today's mid-cap fall, and there was some buzz about what was happening at a leading hedge fund as well. So we have to put that also in perspective.
True, Anuj, I'll come to the point. The two main reasons why one can explain today's big fall in the broader markets: 3% for Nifty, small cap Nifty, and small cap index 4% odd. But let's put this into context as well. If for this year, both the mid-cap index and small cap index indices have rallied 30%. Yeah. The individual stocks are down 2 times, 3 times, 4 times, even 7 times as well. It had become very easy and very obvious for a lot of retail investors to make money in the broader markets. You come every day, buy PSU stocks, and you're going to make money. So I think that it was a bit of a reality check for a lot of investors as well, that this is not going to be a one-way rally. Now, coming to specific reasons, the two specific reasons why market. I mean, there could be explanation as to why market fell today. One, of course, is that I understand there was a liquidation by a large hedge fund in the broader markets, especially in the mid cap and small cap. And the reason for that was one of the fund manager has changed there, and they had to liquidate their entire holdings. That was a big buzz and explanation for a big fall. And I could see the holdings where they had large exposure, and those stocks were down for 8%, 10%, and even 15%. So that's one reason. The second reason was I understand a large private bank who has actually overnight has raised the margin levels as well for retail investors, especially in the broader market. So in mid cap and small cap, if you want to take fresh positions or for the existing positions as well, you have to increase your margin. So that led to either you square off your positions, you trim down, or you add more money to hold on to your position. So I think that those were the two main reasons why we saw a sharp sell-off in the broader markets. But again, just put this into context that we've rallied pretty hard, the stocks have rallied pretty hard, and today was the first day of a bit of a reality check. The feedback is maybe you could see this pain for the next couple of days because this is technical in nature, and in that short time, maybe the focus will shift again back to the large caps, and within large caps, I guess the mid cap, the IT index has broken out today from a technical level, so you could see a bit of outperformance led by IT and banks at least in the short term. That's the overall feedback.
Nimesh, I was looking at the number of stocks which are actually over the last 4 days, which are crossing their respective 20-day moving averages. On the Nifty, just the Nifty 50, every day 3 or 4 new stocks are actually coming up above the 20-day moving average. It's a positive crossover. So it kind of adds to the argument which many are making that Nifty will continue to do well. I mean, it will do well. It's not done as well as the broader market. So even as maybe the mid and small caps go into a bit of a sulk phase, the large caps should be okay. Just one more figure I want to put for our viewers. I asked Yusuf to calculate what was the total market cap of mid-cap and small caps as of the end of yesterday. Guess what the number is? 60 lakh crores.
Wow.
So after today's, you take an average 3.5% cut because the cut is between 3 and 4%. You basically have wiped out 2 lakh crores, a little over 2 lakh crores in market cap in a single day. So that's
I think for the
something.
entire market cap, it was around 5-6 lakh crore for the day.
A lot of that would have been done by the PSUs in the last 2 months or so. Right. In fact, that's where our next story is.
Yeah. Nigel, I mean, the point is, and you put this piece out earlier as well, right? I mean, the PSUs are looking, they're looking rich, and they made the owner rich, which is the government of India. But will the government of India kind of come in and monetize some of this before the party is over?
Nimesh actually as well has been weighing in on this, and there are a lot of good themes out there. But for the last 10 years or so, what we have been hearing is, this is the PSU company, it's not going to deliver. Well, a lot of that has changed. And with great power comes great responsibility. So let's go across to the big wall and tell you what I'm talking about very quickly. Well, if you look at it, all the IPOs that have come, say in the last 5 to around 6 years, well, they've been pretty good. Just take a look at some of those big gainers. And in there, GRSC, RVNL, and Moscow Dow. Take a look at the return. We're talking about 1,000% return, 800% return, as well as a 600% return. And IRFC as well is up more than 220%. Now, let's run you through a couple of data points out there. Now, HAL, Hindustan Aeronautics. HAL has been a rank outperformer. The IPO came at around 1,240 rupees. Then you had the OFS that was at around 2,450. You would have said, well, it's done. The stock has doubled. Well, after that, from there, you're getting another 50% return out there. So the government of India has looked to take off some money off the table, but now they'll be tempted just going by the stock price itself. Current holding is at around 72%, and the market capitalization now is close to around $18 billion approximately. Moving to the next stock, RVNL. Out there as well, they did an OFS. The stock price move was splendid. 19 rupees, it went up by nearly around 5 times. The government said, okay, let's take some money off the table. They did an OFS. Guess what? The stock price is up nearly around 50% even from there. And now the market capitalization on this one is nearly around 37,000 crores. And the government holding is at around 72%. Let's pull in the valuation bit as well for a couple of these stocks. GRSC and RVNL. Both of them, the promoter holding has come down below that 75% odd. And both these two stocks are trading at around 20 times. So that's, I think, par for the course. But there are 2 stocks particularly that I'm looking at. One is Moscow Dock, because the kind of run that we've seen on that particular stock, the government entity holds close to around 85% out there. The market capitalization is close to around 43,000 crores approximately, and the stock is trading at more than 50 times its forward earnings. So, at some point in time, the government could be tempted to take some money off the table. The other one I'm looking at is IRFC. 86% stake with the government of India, more than 1 lakh crore of market capitalization. And on a price to book basis, it's trading at nearly around 2 times odd. So maybe these two could be interesting, interesting stocks going ahead, because at some point of time, the government of India could take some money off the table. So just thought I'll highlight that as well. Guys, what do you make of it?
Well, it's interesting data, and it reminds me what yesterday, we were chatting with, I think, Nilesh. I think he indicated that, Mazgaon docks, the government did an offer for sale at 200 rupees, and now the price is 2,000, right?
Yeah.
At some point of time, the government could look to capitalize.
You'll be tempted, right? You'll be tempted, right? And I mean, everyone's talking about when to take money off the table, whether it's retail institutions, the government of India will say, hey, I have got a sitting duck out there. Maybe take some money off the table.
I'd done a piece a couple of weeks back. The government holding more than 75%. If they come to 75, even at today's price, I think they'll raise 1.7 lakh crore. That's maybe 2 times or 3 times more than that what they're expecting in terms of divestment. So they're sitting on a large amount of funds which they can actually encash. It's a matter of when.
And I just recently met Ishan, the Deepam secretary, and one thing which he had told me was that For stock market investors, one interesting bit would be to look at companies where the government holding is now down to 51%. Because that's where now there's no overhang of any OFS or any share sale. That's something that you could look at. Once this correction settles down, if you want to restart the PSU rally, in that perhaps focus on companies where the government stake is already down to 51%.
But traditionally, I don't know if you guys agree with this. They've not been a great investor, right? I mean, they're not an investor actually. They are a strategic owner of companies.
Yeah.
For this purpose, we are looking at them as an investor, but they've not. I mean,
I'm saying forget that strategic divestments. I'm saying only by coming to that minimum
75%, which has to be done.
Which has to be done, right?
Correct.
And this is the time when there is so much of activity.
Yeah.
That there is no mutual fund holding in Mazgaon Dock. They're not able to buy because there is no liquidity.
Yeah.
If the government comes and says, hey, I'm giving 10%, I'm
it
sure
creates liquidity. It serves the purpose as well.
That is changing now. The fact that how you look at PSUs versus private, maybe under the current regime. I recently did an interview with Prashant Jain, and he was making this point because he has been one of the early and large investors in PSUs, and that bite of Prime Minister Modi also went viral, right? On that, on
fact,
investing in PSUs,
No, I'll just give another example. Look at the annual reports of some of the PSUs now. They're as good as what a private large cap company would deliver. They're absolutely clear in their communications. They're writing as to what they want to achieve. And well documented, So PSUs have actually changed a lot.
Nigel, we speak to PSU banks on the show, right?
Yeah.
I don't go back and look. If you hear the same managements 10 years back, the amount of disclosure.
Yeah.
They know. I mean, net NPA, slippage, this, that, the other. I mean, and the investor presentations are top notch, as Nivesh pointed out.
Absolutely.
Up there with private sector banks and the like. So, let's take a quick commercial break here on that note. We'll come back. But more, we'll actually leave you with some market opinion. But on the other side, we've got more data, and as we pass through the correction that we've seen in the mid and small cap part of the market. Stay with us.
Welcome back to this special edition of Editor's Roundtable. Well, after the rise came the fall today. While the Nifty held on to that 20,000 mark, we saw a sharp correction in the mid and the small cap universe. Now, the question is, should one be optimistic from here on or turn a bit cautious? So we've compiled all the opinion that we've got over the last 48 hours, which includes today after the 20,000 mark was hit, and even yesterday as we were on our way to achieve that milestone, magical number of 20,000. So let me start with the bullish view that we got from Vikas Jain of CLSA. He says that India has the most compelling earnings growth story over the next 2 years. India's expected earnings growth is likely to be the best amongst the 20 emerging markets. Valuations, according to him, favor a strong entry point in the Indian market. So very bullish from here on. Chris Wood, the famed author of Greed and Fear, he's written an article after the Asia Forum in Hong Kong, which took place earlier this week, and he's comparing India versus China. And he's saying that there is conviction among long-term investors that China is a structural underweight, while India is a structural overweight. But there is a possibility that just in the near term, China may outperform. But here comes the bit of a cautious view. Sanjay Mukim of JP Morgan is concerned about higher oil prices, lower rainfall. These are key macro concerns, and he says that tightening macro conditions support a reduction in beta in the Indian equity portfolios. So he's supporting a reduction in beta. And Rahul Chadha of Mirae Asset Global, we had a chat with him earlier today. He's saying the run-up in the mid and the small cap universe looks worrisome. He's already started booking profits in the mid-cap positions in real estate and hospitals. In fact, his call is that in the global equity markets in US, we are likely to see a pullback in the next 6 months. Now, moving on to the local voices that we heard. This is Sunil Singhania of Abacus Asset Management. He's optimistic, but he's laced it with a little bit of caution. He believes valuations are comfortable at the current levels. They're not unreasonable. We are trading at 18 times FY25 earnings, forward multiple, which is reasonable. But in the tilt between large caps and mid caps, he would put incremental money to work in large caps. And finally, Atul Suri of Marathon Trends PMS, he is emphatic about saying that we're nowhere near the bubble territory in the market. He sees more upside going ahead because on a 2-year basis, the Nifty has only risen about 15 to 16%. So there is no reason why we can't have another 8 to 10% rally. And even the small cap universe is just playing a catch up. If you compare it over the last 2 years, is underperformance. So that's just a quick compilation, a summary of what we've heard over the last 48 hours. On that note, let's listen into some opinion and then we'll wrap up this edition of Editor's Roundtable. Thank you for watching.
I feel where the market is heading or what my targets were, I see that there is still more upside going ahead. As I said, there's a lot of panic, there's a lot of talk of bubble, and there's a lot of talk of all that. I don't think we are anywhere near bubble territory. I think that there is more upside. And what I say is that you've seen 11% and you're like getting this thing, that we can have another 8, 10, 9, 10%, And a lot of people say that, oh, you want to sell out this segment, we should get out, blah, blah, blah. You never know. You could be missing a more interesting part in the market.
I think this move in mid-small caps up nearly 35 to 40% since last 6 months, when globally Fed is tightening, balance sheet is contracting, would be a bit worrisome. So again, that's something we've been doing since, I would say, last 2-3 months. Look at our mid-cap portfolio, some of these mid-cap names, whether it's hospitals, real estate, or other sectors. Look, we've owned them for 5-7 years, but look, valuations look kind of fairly full here. So what we're doing is top slicing probably 10-15% and moving that to large caps.
Audio check, 1, 2, 3. Avi? Audio check, 1, 2, 3, 4. Yeah, I can hear you.